welcome back to Lamb's Cryptoverse. Today, we're going to talk about the nuances of on-chain metrics. Because the issue with on-chain metrics, or even charting for that matter, is that I see one thing and someone sees another thing. And unless you're deep in the weeds, you're not going to really know how to read the charts. I've seen so many expert analysts on YouTube and Medium articles and website articles that sometimes just get it wrong. And of course, I make a lot of mistakes too. We all do. And remember, this is for your entertainment. It's not financial advice. So let's get started. I want to show you a really interesting phrase. Let me just minimize myself here. And that's my little lamb there. And let's get started. Oh, looks like I disappeared. I don't know why it does that. So basically, I want to show you this. There are three types of lies. Lies, damn lies, and statistics. And what does that mean? Is that basically statistics, including on-chain metrics, could be interpreted and manipulated. So you just got to be careful with that. Very careful. So let's get started. Today we're going to talk about, and I think since it's confusing, I'm actually going to explain it to you. Explain what I'm going to introduce to you. So the first thing I'm going to talk to you about, which is really one story. The key thing that happened is that FTX went bust. And when FTX went bust, all their exchange balances started declining rapidly because everyone was like, let's get out of here. I don't want to have my money on exchanges because who knows what's the next exchange, centralized exchange, to go bust. And then the second thing I want to point out is that surprisingly, it's more retail that's doing that, more retail investors, because the long-term hodlers and the investors that have, like institutions that have a lot of money in Bitcoin, they're actually putting money onto exchanges and they're selling. So nothing makes any sense because remember, this FTX event is a capitulation event. So during a capitulation, or at least during a bear market, you would expect the opposite. You would expect little retail investors to panic and run for fire, right? Fire, fire, let's run out. But what's going on is the big investors seem to be reducing their Bitcoin investment. So here we go. I'm going to show it to you step by step. So if you get confused, just think about the story that I told you. So let's get started. Bitcoin exchange balance and net position change. As I mentioned, all along since January, exchange balances have been declining, which is a good thing. But then the decline accelerated during the FTX bankruptcy. And you could see, it says here in red, and this is courtesy of GlassNode, all exchange balances went down by 72,900 BTC. And that was like week 47 that occurred, the weekend in November 14th, I think it was. But overall, the exchange outflows have been 106,000 BTC per month. But on a weekly basis, people panicked and sold 2/3 of that monthly decline coming from that 1 week. And you could see here, they point out that there was similar declines in June and July 22. That's around the Terra Luna crisis. Actually, it officially began in May, just so you know. And then there's, and 3 Hours Capital, I should have said. Maybe that's what it was. This is June, July is the subsequent event or exchange outflow after the Terra Luna crisis and the 3AC hedge fund bankruptcy and Voyager bankruptcy. And then you got the November 2020 outflow and, of course, the April 2020 outflow that occurred during the hellish weeks of the COVID-19. So again, what I'm saying here to repeat for the third time is that exchange balances have been going down, and then people panicked and they reduced those balances even more during the FTX bankruptcy. Now this one here is shown, like I said earlier in the story, that the whales, investors that own a lot of Bitcoin, huge amounts of Bitcoin. I forgot what the number is, but it's like 10,000 Bitcoin and up, something like that. Basically, these investors have been depositing Bitcoin onto exchanges. And you can see in the bottom here where my pointer is, it says Whales net exchange inflows have been between 5,000 to 7,000 BTC per day. So that's a little shocking. So that's showing something. That's telling you something, that even the whales are starting to capitulate, because when they put Bitcoin out of their wallets onto exchanges, that means they're thinking about selling their Bitcoin. Because you remember, these institutions tend to use centralized exchanges more than non-custodial DEXs, for example. And here we're showing the spent old coin volume that are greater than 6 months. They're increasing. So basically, this is telling or confirming the story I just said before, that the hodlers, which tend to be whales, they're spending their Bitcoin. And here we're seeing the Bitcoin realized profit and loss. And what we're seeing is that we're seeing realized losses. So even these whales, or people that have held onto their Bitcoin for a long time, even they have realized losses. It just shows you the depths that we have in this bear market. This bear market's going on so long that almost everyone is getting losses. And the last chart I want to show you confirms what I said earlier. If you remember, I said that while exchange balances are going down, and down quickly, hodlers and whales are not doing that. They're putting their Bitcoin, they're moving them from their hard wallets and whatever soft wallets to centralized exchanges, because they want to sell the Bitcoin. If you could see, and you could see here, that's exactly what's happened, because their supply, the long-term hodler supply, it was at an all-time high in early November, but since then we've had an 80,000+ decline in Bitcoin from 13.9 million Bitcoin to 13.799 Bitcoin. But that's still not a lot. So there's been some panic amongst investors that ordinarily do not panic. And you can see that here, this orange line is declining, because this is the total supply, the net supply held by the long-term hodlers. But you could see overall, they've been accumulating Bitcoin at a pretty aggressive pace, right? It's been going up since July. These long-term holders have been holding on to their Bitcoins. It's only recently that they've been selling. So there's a few ways of interpreting this, and here's the conclusion I want to say, is that it's bad when you see these long-term whales getting rid of their Bitcoin. But on the other hand, these are hodlers that are showing some sign of panic and capitulation. So to me, and even to GlassNode, this is a sign that maybe we're nearing the end of the bear market. So we're not there yet. And I've got other data and other on-chain metrics and macro data to show you that we're not at the end of the Bitcoin bear market or the crypto winter. But this is I was going to say canary in a coal mine, but it's more like signs of spring. Basically, this is a sign that we're getting closer to the end of this bear market. So that's all, folks. I hope you enjoyed this, and I hope you enjoyed that beginning story that I gave you, where I explained what I was going to show you, so it's clear, because I know this stuff could be really confusing.